Hi, it's Lee, and welcome to the Tesla Economist. I get a lot of comments of people upset with what Elon is doing. Whether it's selling shares or making noise on Twitter, a lot of shareholders are not happy with what he's up to. Others are proud of what he's doing in the name of free speech and think it's necessary as free speech is the bedrock of democracy. Is Elon being used as a scapegoat for what is really happening to the stock price? Well, I thought we could have a look at what is happening elsewhere in the market and see if we can compare that with Tesla and see how much of this stock price drop is due to the actual market. Now, we obviously have the macro environment issues we are facing right now, and that has definitely had an impact on Tesla's stock price, along with just about everything else in the market too. The tide has come out. And on top of that, previously we were in a boom. We're now experiencing the contrast between a boom and a bust period. The bull goes up the stairs, but the bear goes out the window, as the saying goes. And that it has, with Tesla's stock price being 66% down for the year. Booms don't just mean there's more money in the economy and the markets go up. There's also too much money, and cash becomes trash. People want to put money in all sorts of places. They become deluded as to how the future will go and start investing in strange assets like NFTs or any kind of crypto with a new spin, just like they did with the dot-com bubble. Anything that was a website with an idea attached, people thought could make a fortune, and invested like there was no tomorrow. Even that was nothing new. Look at the Mississippi bubble, or even the South Sea bubble. Anything with the name South Sea was worth a fortune. And last boom we saw bubbles in crypto, and what was becoming the metaverse. But also, you guessed it, EVs. Tesla had shown the world how profitable EVs could be, and was the first car company to reach a valuation of over an impressive $1 trillion, yet only owning a small market share of the auto market. Well, if Tesla can do it, then anyone can do it. Can't be that hard now. Tesla has done all the work. Just copy what they did. They even left the patents open for anyone else to use. The auto industry is now going to be far more profitable as it has become more vertically integrated, removing the cost of gas and engine maintenance. All of a sudden, companies like Rivian were valued over $100 billion, more than auto companies that had been around for a century, in just a short space of time, without even selling one vehicle. Rivian is now trading 1/5 that valuation, or Lucid is down 87% from its high. Just like what happens every time there is a new disruptor in an industry. People think everyone else can follow, yet it quickly became apparent that this was not the case, and it was incredibly hard to make a profit, even in those boom times, and going to be a lot harder in a down market. But either way, there was an EV bubble that Tesla's stock price also got to benefit from. It popped, and Tesla got hit by that pop too, in addition to the broad market crash. Whether you agree with it or not, Tesla is still very much considered a car company by the market. The auto industry is cyclical. They do very well in the boom times, but not so well in the down times, and even need the odd bailout to keep going. Tesla is getting affected by the macros, the EV bubble, and the auto industry. That's right, Ford is down 54% from its highs too this year, GM 46%, and these are legacy industries with values that are not based on potential future growth, with a beta of around 1.4 compared to Tesla at 1.9. However, even when we were in those bullish times, we were doing financial forecasts that would still justify Tesla's stock price, even as we saw it at its highs, assuming Tesla came through with everything Elon had said. Well, not even that. Really just 4680 cells. That was going to be enough. Of which, unfortunately, we are still waiting, and the progress is not going as fast as we hoped. But Tesla are aware of the potential of these cells more than us, and are working around the clock to get those lines running. But the stock price got ahead of itself. However, at least with Tesla, there is a path to get back there again. If we compare Tesla to the Nasdaq, well, the Nasdaq is only down 11%. Tesla 66% for the year. The Nasdaq bottomed out in May and has recovered a lot since, whereas Tesla did start to recover too, but then started dropping again late September, down to where we are now, from $300. Is the rest to blame for Elon and Twitter? If we look at Amazon, it's also down 50% for the year, with a similar pattern to Tesla. It also got lower from when the Nasdaq bottomed out. Similar for Google, down 39%. Even Apple down 27% with a similar pattern, which is a lot more than the Nasdaq. But still, Tesla is down a lot more than the rest. Tesla has had other things against it too, compared to these other stocks. I don't believe there was as much FUD circulating around their products or businesses. Tesla had Q3 miss its deliveries due to new logistic methods and were 22,000 short, missing market expectations, along with a nightmare Q2, which is still affecting the trailing 12 months earnings. I believe these other companies like Apple and Google were also doing buybacks to prop the stock up during these periods of the massive sell-offs. In fact, Tesla had the opposite of a buyback. They had a major sell-off from Elon, which, yes, had to have definitely had an effect on the stock price. I mean, how couldn't it? The market has supply and demand too. A sell-off like that in a down market is going to hurt the stock price. I admit that has definitely wiped some currency off the stock. If I had to guess, it might be around $50 from the stock price, which isn't nothing. But we have people making claims that Elon is responsible for the entire drop, which is definitely not realistic. Also, this sell-off should recover a reasonable amount as the market adjusts to pick up the slack at these good prices, at least when they think Elon has stopped selling finally. Elon seems to be passing the blame to the macros, which I think he is right, or at least the majority of the crash. It just doesn't obviously help. It also doesn't look good for the confidence of the CEO to be selling off when there is so much negativity circulating the stock. And then so many people saying he has damaged the brand and destroyed demand. It's become a perfect storm, and the stock price is getting hammered. I'm hearing bulls who used to say things like Tesla's stock price would hit crazy numbers. Now they're backtracking on what they said, saying that it will take a lot to get to the prices we saw. Their sentiment is fickle. They got swept up in the magic and thought it was headed to the moon. Now they've come down to another false reality of doom and gloom, and that is affecting their judgment again. This entire time, I've been sticking with the numbers, and not much has changed. We just need to see 4680 production lines ramp up, and we should see new highs again. And the production cost of those vehicles with the 4680 cells is low enough to meet demand at any price when you compare it to what the competition is offering, and still generate great margins. On top of that, the US government have helped by also giving Tesla a further $3,000 in subsidies for each of the Model Y batteries, and a discount to consumers of a massive $7,500, which should remove issues of demand. A lot of people are cross and frustrated right now. The last person they want to blame is themselves, and Elon is an easy target, and Elon has made himself an even easier target, and the media have jumped over it too. You may be frustrated with yourself for buying at a higher price or not selling closer to the high, and you didn't sign up for the Twitter fiasco. But I'm not sure Twitter actually has hurt the stock close to as much as some people may think. Teslas are still incredibly profitable, and the company is currently valued on a trailing 12 months of deliveries of under 1.2 million. Tesla are now at a run rate of closer to 2 million. That is quite the contrast. Admittedly, I didn't think the stock would get this low. I thought the market would have priced more growth into the company, and there are demand concerns. But all ICE vehicles would have even more demand concerns, and they can't increase demand by reducing prices. As Elon says, returns in savings accounts are offering higher interest rates. These are likely not sustainable either, and we would expect the reserve banks to capitulate sometime. The question is when they do, how much of the economy have they left intact? These times really are testing your conviction with Tesla, but at the same time, it has never offered this good a return relative to earnings. Hopefully this Q4 will help gain some perspective on the company again and will remind people how solid the fundamentals really are. The stock price is depressing them too much, and many are getting too negative about it all. It looks like Tesla are doing a massive push this quarter, offering many incentives. Of course, this could be interpreted as demand issues too, so I guess we'll have to wait and see. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.